The pitch from the UK government is come here, invest, be green, and invest some more. Have they been persuasive? What has the government been able to tell executives?
Well, I think they have a good pitch, but as you know, we've been very, very committed to the UK for a long time. We have 6,500 people here in the UK, and in fact, even pre-pandemic, going back to 2018, we built a new building here, Plumtree Court, which is a $1 billion commitment. We've been growing up, also in Birmingham, where we now have expanded our presence in the UK. So we've seen the UK as a tremendous opportunity for us to have a significant outpost, serve our clients, both here and also provide resources across the continent.
Has that changed at all because of Brexit? We have the energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
Well, I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world, there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition. We need thoughtful policy. In my opinion, we need to put a price on carbon. And I think this is something that's very important. There's an enormous premium for certain green technologies. We can invest in technology that can collapse that premium and allow us to deliver a much more sustainable future. But this is something that's going to take some time, and I think it requires both good public policy from our governments and then active involvement from the private sector. We're trying to do our part. I think we've made a big pledge towards $750 billion of sustainable financing, investment, advisory services. We're working toward that. And we try to spend a lot of time with our clients thinking about how we can support them in their individual transitions. And so this is getting a lot of attention, as you would expect it should.
Okay, there's also quite a lot of regulation going ahead, and we've heard yesterday, for example, about ESG derivatives. Exactly, where does that end? And can London as a capital be the green finance capital of Europe and the world?
Well, I think there's a real, we heard very, very clearly from the Prime Minister, a real sense of trying to spur on in this economy here an opportunity to create less regulatory structure and therefore more incentives to spur more of that investment. And there's a great center of excellence and investment here. Certainly around the vaccines, there was a bunch that happened here in the UK. And so, I'm optimistic the UK will play a part. But when you think broadly about these issues, this is a global issue. And particularly in the developing world, we in the developed parts of the world are going to have to, help to bring the world along and get capital focused on technologies that can move this transition over time. And it's not just here or there, it's everywhere.
Talk to me about China. So we had exciting news from Goldman Sachs, I think in the last couple of days. How committed are you to China, or how wary are you of things changing quite quickly, given some of the economic policies put in place by the president?
Sure, we take a very long-term view, and we take this view rooted largely in the fact that we have many, many clients that have been doing business in China for a long time. They want our support and our involvement. We're extremely pleased that after a long period of time, 17 years since we started our joint venture, that we actually now have ownership and control of our joint venture in China, so we're thankful for that. We have a long-term plan to continue to grow in China. We've recently announced a wealth management joint venture there. There's no question that the bilateral relationship between the U.S. and China is complex, and it's going to continue to evolve. We're watching it closely, but with a long-term lens. China's an important part of the global economy. Goldman Sachs operates as a global player with businesses around the world that are participating in global growth. And so we think in the long term, that presence there will be very important for us.
Is it riskier being alone, or is it safer being in a joint venture? Like, what does it mean in terms of regulatory risks?
Well, I think there are always regulatory risks in all markets, and I think that we've shown an ability to adapt to regulatory change and adapt our business appropriately. To the degree there are regulatory challenges, we'll deal with them. The big reason that we like controlling our joint venture is when we didn't own our joint venture, we owned 33% of our business in China. Every dollar of investment we made, we only owned 33 cents of it. So this allows us to continue to invest for the long term in growing our franchise and our business and serving our clients in China. And we're excited about that. And again, you know, my job in stewarding this 153-year-old institution is to take a very, very long-term view. And that's how we think about it when we're investing in building there.
How much do you want to grow in China in the next 5 years?
I think there's a big opportunity. We've put forward a 5-year China plan. We haven't put the details of that 5-year China plan out publicly, but we run a relatively big business in China, although it's a very small part of overall Goldman Sachs. Our growth is correlated to where there's growth in the world, and there's certainly good growth in China. Access to the wealth of individuals and wealth management platform, given our broad wealth management platform, is something that's very attractive to us. Corporate activity has been quite high there. There's no question that's something that corporates there turn to our expertise in capital markets and advisory services. So I think there's a good opportunity set for us to prosecute over time.
How painful have these high energy prices been in customers in China, but elsewhere in the world?
Well, I think there's no question that we're going to go through a period where there's more inflationary pressure on commodities prices. And this goes back to why, when we were talking about sustainability broadly, I said we have to balance good public policy, with the short-term implications. And that's why it's a transition. If we're too aggressive in the context of how we direct capital or the private sector, that can be more inflationary, and obviously that makes its way down to the end users, individuals, and the cost of their energy or their gasoline, et cetera. And there's a balance in that. If that goes too quickly, that's something that people are not going to be happy about. And for politicians, that'll be certainly something that they'll have to wrestle with.
But what do you say to a climate change activist that says, actually, we have the energy prices, but it's also a good excuse for big banks, big companies, big finance to delay the transition? So to go through a transition, but actually not be as aggressive in stopping, for example, funding some of the fossil fuel companies.
I think this is all a balance. And, I've said clearly that Goldman Sachs is going to be in a position where we're going to be doing business with fossil fuel companies and financing certain fossil fuel companies, but it's a direction of transition. We want to be in business with people that are investing in their transition. We want good public policy. I said to you earlier, we have to put a price on carbon, in my opinion, because that will allow us to therefore accelerate the transition. But all of this is a balance. The most aggressive point of view on the transition and the least aggressive aren't right. It's a constructive partnership between governments and the private sector to make sure, we protect our society and get capital into technologies that can evolve and help us make the world greener. And I firmly believe that's something we can do, but it's something that's going to require a lot of focus and a little bit of patience, but with appropriate intention and energy and commitment. And we certainly have that.
What happens if COP26 is a failure?
I don't see it as black and white as being a failure. I know, the Prime Minister was asked this morning, what do you expect and what's a win? I think part of this, and I think this is one of the constructive things about being a part of the session here today, this Global Investment Summit, and I know it will be the same with COP26, you need to create dialogue. People need to have debates. We have to be willing to debate, discuss, learn, and therefore make good policy decisions as we move forward. And this is all a constructive part of the process. So I see the fact that these dialogues are occurring as pushing us forward. I think that's a very, very important part of the transition journey that we're on. But it's not a yes or no to me that there's a win or a failure. This is going to be a process that we're all invested heavily in.
Thank you so much, David Solomon. I want to ask about your music, but we'll have to do it another time. I don't know if there's anything coming up.
Really happy to be with you, and just happy to be back in London today.